What's one piece of advice you give to all startups you mentor?
Do less.
I love that.
So I think that, do the one thing that really matters, one or two things. Usually startup founders are pretty smart and they multitask and they're doing like 8 to 10 things. Doesn't matter.
Yeah.
Do every day.
When you see a roadmap and it just has so many bullets on it, it's like, oh my gosh.
Too much.
Too much.
Hey everyone, welcome back to the Ignite podcast. Today we're delighted to have Manish Patel on the program. He's a venture investor at Nava Ventures. He's been on the faculty at Stanford. He was a former Google PM, product manager, when that was cool. A little inside product manager joke there. He's worked on Google Ads, TV, Maps. Thanks so much for coming on.
Yeah, Brian, no, excited to be here. A big fan. So thank you for having me on.
I've never heard anybody say that. A big fan. Wow, that feels good. We're up to episode like 94, 95 now. Yeah, so that feels good. Yeah, I love doing this podcast though, and it just gives me an opportunity to meet really interesting people from my little enclave, an hour east of Sacramento. I get to sit virtually with somebody for an hour and learn about them. So it's so cool.
Oh, it's fantastic. Yeah, no, I love this. I love story time and hearing people tell about their journeys to how they got where they are. So I love doing these sort of things.
Well, I'd love to get an intro from you for the audience.
Yeah, so my background is I've been in venture capital now 14 years. Definitely the accidental venture capitalist, which we can happy to talk about. I'm one of the founders.
I think we all are, aren't we? Aren't we just all kind of accidental VCs?
I think so. I think so.
Yeah, I've never met anybody who's like, when I was a kid, I wanted to grow up and be a VC.
Yeah, although I think that's changing.
Starting to.
I feel like young people today are like, I'd love to be like a venture capitalist. So I'm like, oh, no, you shouldn't do that. You should love to be an operator.
Yeah. I was on a panel this morning, how I became a VC at my alma mater, which is Berkeley. Don't hold that against me, but I was on this panel and we're talking about like how we became VCs. And, I was actually the only one, I think, on the panel that actually founded his own venture firm, and everybody else kind of got a job in it. And, now a lot of people, 10 years ago when I got my MBA, it was like all about, hey, I want to be a PM, like a product manager at Google, or I want to work at McKinsey. But now it feels like the tide has shifted to like, oh, I want to be a VC coming out of my MBA program.
It's a little sad to me because I think that, the coolness of the Valley is, maybe I'm old school in this, is like homebrew computers in the, late 70s, early 80s, people that build products. And unfortunately, I think with venture and how it's evolved, I think it's become, the venture capitalist should not be the celebrity. I always joke.
No, we're like all we do is like wire money to people. That's not special. That's like the job you should do when you're tired and you don't know what to do anymore. Like I love it. I can't imagine myself doing anything else. But I'm a weirdo. Like I'm literally like a lot of VCs that if you actually get to know them, they're weirdos.
Yes.
And I think that's like I'd much rather be a founder like of a unicorn. I'd 100%, like any day of the week. Like I admire people like that can go like will this amazing company into existence. I can't do that. Like I tried a couple times and I failed, and like I've been a PM at a big tech company like you at Microsoft, and I've just seen how hard it is to build a good product that people actually want to use. And like being a builder is way cooler than
100%.
Being a check writer,
Yeah, 100%. Any day of the week, the impact an entrepreneur has on the world is far, far more than a venture capitalist. And so, and similarly, I was lucky to have that impact early in my career. Before I came a VC, I was, as you had highlighted, a PM and early employee at Google on the product side. As I like to joke, not a great engineer, but probably an okay product manager. And, being products like Google AdWords, Google TV, Maps that really, reached out and touched billions of people. It's like, this is incredible, and so I realized how special that was. And I was probably like, I may never get a chance to do this again. So let me try a portfolio approach instead. Can I be in the room with the team that's going to do that? Because I'm not sure if I'm going to be able to do that. But it was an amazing set of learnings from, that really led me into venture, of being at Google in those early days, not just as a product manager, but also I had this unique role where I was working with one of the founders, Larry Page, running Google's corporate OKR process as Google went through its IPO and was, developing and just being a fly.
You were there during the IPO?
I was, yeah.
Wow, that's amazing.
It was truly incredible. And it's pretty cool that, it's like 20 years ago today. Not today, but last week or last couple of days was the IPO. And there was a lot of stuff on sort of social media about it. It makes me feel old.
It's one of the rare companies that, and this doesn't happen as much anymore because companies are going public at $5 or $10 billion valuations. Do you remember what the valuation was for Google when they IPO'd?
I don't, because I remember this because it was not a big deal when we went public in the sense like the founders did this amazing thing where they said like, don't pay attention to that, right? Because I think
it
people,
was like a couple $1 billion was what was the price. Because I remember thinking like when I read this headline recently, it was it's gone 1,000x after its IPO,
yeah,
right?
yeah,
Which would imply if it's $2 trillion now, that roughly implies a $2 billion
Yeah.
valuation. And Ron Conway famously wrote a $25K check into Google, 17th search engine, prolific angel investor in the 90s, spray and pray, like extraordinaire, and at a 5 cap.
yeah.
And so,
Incredible.
yeah, so like he only got a 400, with 400x is incredible, but a 400x at IPO, if you would have sold everything, you would have missed out on 1,000x, which is crazy.
It's insane. And I know a lot of people that were a click older than me that had lived through the late 90s and held too long, actually. They'd been at other companies and they held too long and those companies went out of business or, did the public offerings not go well. So people were selling at the IPO and they still made, incredible amount of wealth. But just to think that if you had held on or even invested,
just held on to some of it. Yeah.
Yeah.
Or just, maybe doubled down, right? Took those instead of cashing out those RSUs every quarter, whatever it is.
Yeah.
I think they do every month at Google now, but just kind of letting it ride,
It's incredible. And I think that's the thing that's like interesting about venture in general. The IPO is just a step on the journey for the best companies, right? It's a financing event. It's a liquidity opportunity for some, right? But the best companies grow through that IPO, I think that's the thing that sometimes people forget, it's like they see the IPO as the goal, but it's just one more click on the journey as you build a company. If you're really building a company that has impact on the world, right?
So think about that as a fund manager. So there's fast forwarding all the way to current day. Yeah, you're in the fund business, right? Like, and you got to get some DPI.
Yeah.
And Google, you got a 400x. You're sitting on a 400x, right?
Yeah. Yeah.
You're in, I don't know, year 7, 8 of your fund. Like, what do you do?
Yeah. So
just throwing like case study questions at you now.
Yeah, totally. Yeah. Yeah. Well, I think our perspective is as a fund, we're not public stock pickers, right? So we would choose to distribute that stock and let our LPs decide, do they want to hold or sell? That's up to them, right?
Yeah.
That they have very sophisticated teams that think about their risk reward profile. That's not our job.
Distribute the shares right away, wait 6 months. Do you feel like it's
in that range, right? Like kind of like you don't want to affect the stock offering price or move the stock. But my view is if you really do think you're in a company that's like a Google type company, from my personal sort of position, long hold, right?
Yeah.
I mean, there are not many companies. I mean, when I was in my early 20s at Google, if you told me Google's a $1 trillion company, let alone a $2 trillion company, I would have been like, you're bananas.
Yeah.
Are you kidding?
15 years ago, that'd be like, what? What are you talking about? No, there's no $1 trillion companies.
Yeah. Yeah, people have looked at you funny, like maybe Saudi Aramco or something like that, right? But as a tech company to billion dollar company, people would be like, no, that's not possible. So I think the world just evolves and changes a lot, and the tech, has always been important to sort of the ecosystem of industry, etc. But now it's become its own whole industry, which is pretty exciting to kind of be, doing what we do, being able to be exposed to that stuff.
So let me ask you this. So you're a pre-seed investor. I'm asking for a friend. You invested at the 5 cap, Google. You got in really early, and now they just raised a massive $200 million round on $2 billion, right? Yeah. So you're sitting on year 8 of your fund. Yeah. You're probably raising fund, your third fund after you invested in that Google, right? So that Google pre-seed. How much do you sell of that to generate in a secondary transaction in that round to generate some DPI?
Yeah. I mean,
you're sitting on 400x, right?
Totally. I would think about it from two lenses. One, the founder lens, like what is the founder's, what's that relationship, right? If you don't want to send a bad signal to the company or the future investors or anything like that you're a short seller. So there's that lens. Then the other lens, I think, is from an LP lens, right? I'm pretty sure no LP in the history of LPs has gotten mad about liquidity, right?
No, it's like, great distributions. That's awesome.
Distributions is great, right? So I think it's about, can you get your bait back? Can you kind of get a few turns on that dollar? And do you write it out or not? And that's where I think it's also important to really use that asymmetric information. You're an insider in the company.
Right.
You know what's happening in the company.
Yep.
Forget about whoever the next fancy investor is, some growth fund, wherever it is. Don't be swayed by that. Be swayed by your own analysis, right? And I think that's the difference between maybe the last 10 years of investing and the next 10 years, where I think there's this rise of the professional investor versus some folks that maybe did the spray and pray model, but then didn't really take away the right lessons, right? Because, a few years ago, everything was just getting marked up. It went bigger and bigger and bigger. But now, obviously, the market's changed a lot. And this is where I think it's like, okay, do you really understand what this company is about? Do you get where it's working, where it's not working? No company's perfect, but what do you really believe? And are you really underwriting it to something that you think it's a 2x from here? Do you really think it's a 10x from here? And over what time period? Like all those types of conversations matter.
Yeah, love that. So let's go all the way back to Stanford and kind of how you ended up at Stanford. What was that process like? And then kind of what you did immediately after.
Yeah, absolutely. So getting into Stanford changed my life. My family's from East Africa, Uganda. I was born in the UK. I grew up most of my life around the Midwest, a big chunk of it in rural Kentucky, of all places, in small little towns, a couple thousand people. High school in Virginia, and getting into Stanford opened my eyes to the world, right? I didn't really understand what technology was, and my freshman year was 99, so it's a long time ago.
Okay, I'm same. I was 98. All in 98, yeah. So almost same age, yeah.
Yeah, same cohort. Yeah. And it was a cool time to be in Silicon Valley. The world just went through this amazing cycle of companies like Yahoo and eBay that really changed the world. And
Netscape.
Absolutely. This is incredible. So I was like, wow, this is really cool, And so I just fell in love with entrepreneurship and what it could do and impact the world. And I studied engineering at Stanford and also economics because why not? As an immigrant kid, always trying to do more. And
why get one major if you can get two, right?
Yeah, exactly. Exactly. 2 for 1. I'm here for the same amount of time.
So it's computer science and economics, you said?
Yeah, actually, it wasn't computer science. It was just pure engineering and engineering design.
What is pure engineering?
Oh, it's a generic engineering degree. So it wasn't even So
it's a little civil, a little mechanical, a little this, a little that. Yeah.
Specifically, there's this program at Stanford that was called product design, which is really which is what I teach in today, which is about really building great products. And one of the reasons I was attracted to that program at that time, and this will tell you a lot about how old I am, the most entrepreneurs that had out of any major at Stanford were coming out of that program, people that started companies. And that's what really attracted me to it. And there was this legendary professor there who has become a life mentor of mine. And he's a real professor. I'm a fake professor at Stanford named David Kelly. He started IDEO and the Stanford D School. Wow. And I was lucky enough to kind of get his mentorship when I was, 18, and it was just
this is when design thinking was all the vogue. I mean, it still kind of is, but it was kind of on the ascendance in the 2000s. And
totally.
I remember reading Design of Everyday Things, when I got into product, and just my eyes being open to how things are made, right? All the little design choices. And that was always really fascinating, as a product guy.
Oh, yeah. I mean, I think it was like you're speaking my language, right? It was kind of great product people. I think about products all the time, not just tech products, but it's like, oh, how would this mug get made? I wonder what that, my favorite show is this really dorky show called How It's Made. It's just footage of factories making stuff.
Well, this is funny because we were chatting about all my gaming stuff in the background, and growing up playing Nintendo and PlayStation, and you're just constantly exposed to different UI and UX as a gamer, and so you kind of learn an intuitiveness of what makes a good experience.
Absolutely.
So I found when I finally switched to product, which wasn't until my 30s, so I was in my I was 31, 32.
Yeah.
I was like, oh yeah, I get all this stuff. I've been a gamer my whole life. I know how interfaces should work.
Yeah, you've been doing it.
Yeah, I've been doing it, right? Yeah.
Yeah. I mean, truth be told, I didn't know what product manager was when I became a product manager, right? Now I think it's kind of more in the ethos and in the Valley, and people talk about product management, but that was not as widely well known. It was kind of what is this role? It's kind of pseudo marketing, pseudo engineering, a little bit of jack of all trades, master of none. What are you doing?
What would you say you do here, from that movie Office Space? What would you say you do here? Well, I take the requirements from the customer and I give them to the engineers.
Yeah, I got my red stapler right here.
Yeah, the red stapler. Yeah, totally.
It was so exciting just to be at Stanford, and the people that were around campus, and it was also, I think the thing that I really loved about it, compared to other places, was people would always ask well, who's your family? What'd your mom do? What'd your dad do? In the Valley, no one cared.
Nobody cares about that. Yeah.
They didn't care about this kind of what
they do care what company are you working at, and what's your startup, stuff like that. But they do not care where you're from. Yeah.
No, at all. And I love that, right?
Yeah.
It's kind of like,
It's a
it's like, what do
meritocracy.
you
Yeah.
do today?
What are you doing right now? And
Right
do you
now.
like what you do? Yeah.
Exactly. And then the other thing that I kind of was enamored by was like, oh my gosh, literally like two people in a garage can build a company that changes the world. Like, i.e. Hewlett Packard from way, way back in the day.
Right.
Like that's pretty cool.
Like Google, Larry Page, Sergey. Yeah.
Yeah. Fast forward, 60, 70 years, Google. And then like so many other people, over the years doing that. And I'm like, it's incredible, And so that's what had me fall in love with sort of technology and engineering and entrepreneurship. And, I was lucky enough to get there at Google in the early days. I certainly wasn't some sort of brilliant person that saw Google as a giant company. But a lot of folks from Stanford, obviously the founders, were part of Google. So there's just kind of this great group of people that are going over there. And I think a good rule in life is generally like, go to where your smartest friends are working. Even if you don't fully appreciate and understand it, it's probably good to pick companies based off people versus anything else.
Yeah. I remember people saying that, try to surround yourself with smart people. And 20 years ago, when I was like in my early 20s, I was like, why would I do that?
Yeah.
I had no idea like how important that is. But if you look around and you're kind of the smartest person in the room, you're probably in the wrong room.
Oh, yeah.
Yeah. And you should probably work harder to get some smart people around you because it does
Absolutely.
rub off on you and make you better.
Yes.
And that was the best thing about being in Silicon Valley for over a decade is just being around lots of smart, capable people.
100%.
Yeah.
Yeah. And I think it's amazing too, as being you and I both been in the Valley for a long time, how much like smarts is one thing, but it's not enough, right? If you think about how much luck is involved in company creation and timing and all these sort of exogenous things. And I think one of the things I often think the media does a disservice to is like, every company is like the 7-year overnight success, like the struggle before it actually works is insane. And I think there's this kind of legend kind of telling component that's part of the story of these companies where it's like, wow, it was not clear that company was going to work. If you talk to anybody that was actually there in the early days, it was like, no, things were broken. This wasn't working. We had no idea. But then like, hey, sometimes my competitors failed. They misexecuted. We got lucky. Something kind of swung our way and like it worked out, but I think that's the interesting part of the story. Usually it's like when stuff didn't work, how did you guys navigate through it?
Yeah. And it's funny, the harder you work, the luckier you get is another phrase. And I think that's really true. Like, I look back at my career and I just put myself in the right place at the right time. And I got lucky sometimes. And I got unlucky sometimes too, like at the wrong startup that's failing and failed a bunch. But I got lucky enough to put me on a trajectory to do what I do today. But that was like, so much luck, so much serendipity over and over and over again.
I love the appreciation for that because I think sometimes people don't, sometimes you meet folks that have been wildly successful and they attribute that success solely to themselves, and they start to believe that narrative. And it's like, nobody is ever a team of one, Best founders are like a function of their management teams, their entire companies. That's why they build great things. And I think, as I look at companies, it's oftentimes people do this unfortunate thing of channeling some superficial version of a Steve Jobs and like, oh, he figured it out, right? Or even Elon Musk. It's like one guy. No, it's like a huge team of brilliant people around these people.
Yeah.
Like they're important, but it's this huge team of other people that they've been able to recruit, convince, etc., to go build with them.
Yeah. Yeah, exacting standards, high standards.
Oh yeah.
Just wanting to put a dent in the universe. That's very much a thing because like the harder you work, the luckier you get. And I think people like Steve Jobs and Elon know that, right? And they just kind of keep pressing people to the point where like you're in a reality distortion field, right?
Yeah.
You're like, oh no, we'll launch that, whatever spaceship in 2 or 3 months. I read his biography by Isaacson, and and he'd be like, no, it's gonna absolutely take 12 months. No, we're gonna do it in 3.
Yeah.
Stuff like that, just like really pressing them to do the impossible.
100%. I think the best leaders do 2 things really well, which is context and clarity. They create context all the time for that team of people, even if it's not sort of reality, right? It's they're priving out that bubble around you, reframing the world so it makes sense to you, right? And then clarity of like what you should really be focused on and what you should not be focused on. I think if you can do that and you have, obviously you have to have a talented team that's adaptable and learning, you can do some pretty magical things.
Yeah, that's impressive. So you come out of Stanford, you have this double major. What do you do next?
Yeah. So I actually had a slight detour before Google. I'd said no a few times because again, I didn't think it was like the 30th search engine, whatever. I wasn't some great company
Right.
picker. I was like, I don't know, maybe. But I had actually went to work for a nonprofit in
Oh,
Washington, D.C. I was working with disadvantaged immigrant populations. I'm lucky enough to make a little bit of pocket money at Stanford, doing a lot of side hustles and that sort of thing. So I had a chance to go do whatever I wanted for a little bit, work for this nonprofit. Probably the most important work I'll ever do, working with people that really had really tough problems, right?
yeah.
And while I was there, I, worked on some systems to do legal translation and just like helping them build some pseudo products. And Google kept knocking because a bunch of my buddies from Stanford had gone there and like, you got to come here, you got to move back to California, you got to do tech full on. And I thought, okay, maybe I'll go to Google for like a year, get me back to California, and then, maybe I'll start a company or something. In the book of life, always better to be lucky than good. I went back to Google a little bit before the IPO. Ended up like working on some pretty incredible teams and, was at Google through that hyper growth cycle and just had tremendous learnings as the company was scaling. Even now, looking at 20 years ago when I started, there's still learning today, just reflecting back on like how Google worked, why it worked, where it didn't work,
Mm.
and realizing how uniquely it's special of a place it was. It was truly incredible. And not just because of the founding team and the management team, but the context around which the company was being built.
Yeah.
The web in that moment was really in its kind of 2.0 era, right? The web was exploding. Websites were coming online. The internet was becoming more ubiquitous, right? It went from dial-up to DSL, connectivity was there. And Google was like perfectly positioned to ride that mega wave that was developing.
Yeah.
So what was your first job there?
My first job there was I was on one of the original AdWords teams. So I was working on AdWords, but at least now it's called Google Ads, but it was called AdWords, and there was AdWords and AdSense. So I worked on some of the early AdWords products, and then I worked on the AdSense product, and it was the syndication group. Like as Google was partnering, one of the brilliant strategy moves of Google was, we had our own operated property, Google.com. And then we partner with all these other companies at the time that were very important, like AOL, Ask Jeeves, and others, right? This is taking people way back. They probably got to look it up in the Internet Archive, like what was these companies, but they were really important at the time. And Google basically gained legitimacy. I thought it was great, kind of business acumen and business judo, where they were like, let's give away our ads and syndicate our ads throughout the entire web. That allowed Google to kind of increase its advertiser base, give it more kind of power and legitimacy among people by using the entire publishing network. And so I worked on some of those early ads products. Basically, it was this great moment where you could ride this wave as everything was just kind of working, because eyeballs were increasing. It wasn't like it was like a beautiful UI, beautiful interface. Even today, I would argue these ads, trying to launch an ad on Google isn't the easiest thing in the world. But
it's not,
But
I've funded startups to make it easier for SMBs to do that. Yeah.
It's really hard. But it's kind of like, but the product works, know? So I will jump through these 1,000 hoops and these really complicated UIs and concepts because I know it's going to drive traffic to my website, And so I worked on those early ads products. Then I moved over to working on Google TV, started that group. Actually, there was another great PM who's now a venture capitalist, Cable Desai, started the Google TV team. And he was doing the ad side. At the time, I had this unifying vision of like, well, there's online ads, and then there's radio, and then there's TV, all these different places you could put ads. Let's create one universal dashboard. And Cable Desai, who's also a brilliant strategist and product manager, I learned a lot from, started the Google TV team, and I was able to kind of work on the consumer side of that. And, just like you build ads, you're like, let's do a TV search experience. Let's be able to search over TV content and figure out how do you service content in an interesting way. Exposed me to lots of other amazing people at Google building that. Kind of became some of the foundation, which allowed for Google to kind of do more on TV, and smarter people than I figured out how to launch Chromecast and other things like that. So that was kind of a beautiful failure of a project, though, because I learned a lot. And then
what failed? Chromecast? What failed?
Oh, so it was Google TV, and this was in the it was a set-top box, actually. Eventually trying to launch search on a set-top box when that was the thing, and kind of flew around the world talking to all these random cable providers and IPTV providers, and taking people way back to esoteric TV engineering.
Yeah.
And it was not the right.
It's too early versus like Chromecast and YouTube TV kind of post streaming, post broadband kind of worked out. Yeah.
The ideas were good. I think probably the best thing I have from that, I think I have a dozen or so patents in the television space, which are kind of, I don't know, nice little plaques.
It kind of laid the groundwork. It was like a little too early for adoption.
Too early.
But it's funny as you think about that as an investor, you can, given that failure, you're probably a lot more attuned to timing.
Timing is everything. I think that so many companies die, I think, because not for lack of good ideas, but because of timing. Like the world isn't ready for what they have yet. I really do think the best companies kind of have B+y products, but are in A+ markets,
Yeah. A+ timing, A+ market. Yeah.
You ride that wave, because if you truly had an A+ product, you'd probably be $1 billion company out of the gate.
Yeah.
You kind of have something that's a little crusty, that's a little rusty, kind of works sometimes, kind of doesn't work other times. But the need is so acute on the user end, right?
Yeah.
It just, oh my gosh, I just have to use this thing. And I think that's what I really look for,
Think of like Uber, right? Uber, like the timing, everybody had mobile. You got GPS on the mobile and it just works. And it wasn't a great product. Like it was okay. B+, but like A+ timing, A+ business model.
Oh yeah.
All the other thing, A+ market, like.
Yeah. And the other thing I think that often doesn't get talked about a lot with the Uber story is in a market where there was zero interest rate environment, right? Like, so capital was relatively cheap. It took a lot of capital to burn to build Uber and scale it, I don't know if Uber would exist today, right?
That's interesting. Yeah, they did run it at a huge loss and burned billions of dollars of venture capital to scale it out. Yeah.
Absolutely. So it's kind of like, what is the macro in sort of that shapes the companies? I think it's really important to consider, like what's happening in the world. It really does impact, I think, the shape of companies all the time.
Can you think of a company that won because of a superior product? Or are we kind of in that kind of phase now with like kind of the Notions and Airtables of the world or like Airbnb, I think might have won with a superior product?
Totally. I mean, I think Google had a superior product in its day, a faster search.
Yeah, the search just was better.
It was better search.
Yeah.
That's what it won, right?
So, I mean, that's a really great example of like super late to market, like really crowded space, but superior product. A+ product, probably too late to market.
Yep.
But, you kind of see the demo, and as an investor, you kind of have to make that bet, right?
Absolutely.
Right?
And then you could see
unless you're only investing in 20 a fund, and then you're like, I don't know if I can do like, make this one of my 20 investments.
Oh yeah. I know Google was always a well thought of company, but I don't think people thought it was going to be the company that changed the world in the way it did.
Yeah.
And like, it's interesting when you think about some of the companies that people thought would change the world that kind of hit the ground, hit the wall really hard. Yeah. Like Steve Jobs, who's obviously amazing, brilliant, starting Next Computers, right?
Right.
Like, oh, after Apple, and he's got all this learning, he's going to build this next thing that really didn't go anywhere. Right?
Yeah. But it turned out like kind of out of the ashes of that was, I think the whole base Unix base layer of the OS, right? The OS system. So
better things came from it, but it's kind of is that, and I think about that now in the context of a lot of the companies we're seeing with AI, right? It's lots of brilliant people, huge expectations about how they're going to change the world, like truly sci-fi level expectations of like the future they're going to bring back to like, us normal people, right? And it's like, wow, you got to execute so well to even just meet expectations,
Yeah. Well, we're definitely about to fall into that trough of disillusionment, I think, with AI.
Oh, yeah.
Because it's usually about 2 or 3 years into some hype cycle where you're like, maybe this won't change everything, and maybe it's really hard and it'll take like decades. And then that's when the real work kind of starts happening. You're past all the why we didn't focus on just AI at Team Ignite is I had the AI background. I know how hard it is. I knew how hyped it was, and I knew how big of an impact it will make, but I thought it would take 5 to 10 years, right?
Yeah.
I mean, look at Google, right? 17 search engines. So there you go.
Oh, yeah. These things take a long time, and I think sometimes, you do need the hype cycle because I think that's how you get funding. That's how you get an unfair share of resources to do these inconceivable, unimaginable type of things, right? But usually it takes a long time for these futures to play out, even, Airbnb, it did not work out of the gate. Those guys took a long time before it kind of clicked in, but then once it works, it really works, and that's the exciting part. Like Uber, once it really started to work, there's that network effect,
Right.
that kind of flywheel that gets going, and it's pretty incredible.
Yeah. So walk us through kind of the end of your Google time, what you did next, and how you got into the venture.
Yeah. So, I spent most of my 20s at Google, loved it. I still love the company, and it's been amazing. So many wonderful people that kind of were of my era have gone on to do so many amazing things, on the venture side, like Eli Gill and so many other venture capitalists, Sundar, I remember he sat like right behind me, now the CEO of Google, when he started at Google, and just like these people. So that's always amazing, you never know where life takes you, and to see these people really do things that are just so fantastic and incredible. But so in my late 20s, Google gotten very big, and I was trying to think about what to do next. And I actually thought I was going to start a company. Sand Hill Road was not sort of where I thought home would be. You drive by it, and I used to be like a little bit enamored, like, wow, that's where the magic happens. And then when you actually go there and drive
it's
up,
just like it's nondescript little office parks,
yeah.
Yeah.
It's like, wait,
this is where tens of billions of dollars is deployed every year. Like, this is weird because you just drive down and it looks like just anywhere else in Palo Alto, just like anywhere else.
Yeah, totally.
Brown office building.
Totally.
Yeah.
You're like, what's going on? Right.
What's going on here?
Yeah. So, you get there, you start interacting with these venture capitalists, and, also it's kind of shows like Silicon Valley were not around yet, right? So you had read legends of so maybe you met some of these folks, and I had fortunate to meet a few of them from Google's board and others. But, you realize, wait, initially you think these people are like great, like they see the future, they see the unknown unknowns, and you're like, no, wait a second, you're just human beings, right?
Yeah.
Like, and they have like many shots on goal. They do have strong perspectives, but really it's so much about that founder journey. And so, I ended up randomly going to a venture capital firm that was called Highland Capital that was starting to really build out its West Coast presence. They were based out in Boston. I thought I'd be there for a year as kind of like a pseudo EIR investor, kind of learn the dark arts of venture capital, the other side of the table, like, how does this stuff really work? And then I was like, then I'm going to go start my company, right? Because I don't have an MBA, I was not as smart as you to go to business school.
Yeah. I might have been stupider than you to go to business school, but no offense to my Hassies out there, but
I just kind of like, well, this will be like my little bit mini MBA because every week there'll be all these awesome business case studies of companies, right?
It's funny. At the time, I always thought I'd just climb the ranks of product. Like that's why I got the MBA, because I looked at people like Sundar, right?
Yeah.
And they have MBAs. So I'm like, okay, I should probably like get an MBA if I'm going to go be like head of product or some C-level. Yeah.
Yeah, because I remember in the early days at Google, I was doing a lot of like the product interviews and being with hiring committee and that sort of thing. If you had an MBA, it was actually a kind of a negative.
Kind of a negative, yeah.
Yeah, it's just
way more impressive to start a company.
Oh yeah,
Raise some money. We failed. We burned through a couple million. We sold it for $1 million, like whatever. Like amazing. Like that's like way cooler than an MBA.
Oh, absolutely. I think that's what I learned in the early days of Google. These people that were kind of CEOs from like the mid 90s that then became just product managers at Google, and that I think had a ethos to it. And like
real senior people just product manager.
Totally,
not a senior, not a principal, not a yada, yada, yada. It's just product manager.
Product manager. Because, there's so many people like that that actually built companies in the 90s that just kind of hit the wall, or just, didn't have like amazing outcomes. And they're like, okay, cool. So that didn't work out. And then came to Google. Had this weird collection of like brilliant people. Because by the way, in that era, there weren't a lot of jobs around. If you go back 20 years ago, when you and I were coming out of school, the economy was not good.
I graduated 2003, so probably the same. Because I did the 5-year plan. I switched majors, and it was a bloodbath up in Seattle where I graduated. It was like nothing available.
Yeah. So in that moment, it's like there weren't a lot of jobs around. So today, I don't think this would happen, but they're this like crazy concentration of brilliant people that were capable managers, brilliant technologists that you couldn't otherwise get to come together,
Yeah.
And so you had this amazing set of learnings from them. Fast forward for me, I had all these great experiences, and I was like, well, maybe I'm going to go start a company. Google gotten very big. Accidentally discovered venture, and this like, whoa, wait. Every day I get to talk to founders. They're going to tell me the secret, like this cool thing about, whatever it is, scratch and sniff stickers, umbrellas. Like, they're going to change the world. I'm like, that's incredible. Yeah. And then if I like them, I can invest in them. Like, what? And then you get paid on charge way too much money if it works out for being part of the journey. Like what? Like, a lot of credit to Don Valentine and all these people that kind of created the industry many, many years ago. Like, this is amazing. And it's such a humbling job, as you know, Brian, meeting people every day. And it's just like really just, doing these unimaginable, like larger than life things and getting to hear their life stories and then help them in that journey. It's really a job of privilege. It's such a wonderful experience. And that's what kept me going, frankly. Like I did it. I thought I'd be there for a year, ended up being there for almost a decade at my old firm, which is a big kind of platform firm. I put some good points on the board, some good wins, etc. So I got promoted very quickly to general partner. I just love the journey of the entrepreneur.
Yeah.
And just watching it, being part of it,
Now, were you guys pretty concentrated in that decade? Like how many out of each fund? Were you taking board seats, all that stuff? Or
I was. Yeah. So I was fortunate to be able to take a number of board seats and learn a lot from some great people in the industry through that journey and realize how weird of a job it is, frankly. Like every company's different. And like I think the thing I really despise about some venture capitalists, they give these rules of thumb advice, It's just kind of like they look up from their phone and they mumble something, like in a board meeting or what have you. What are you talking about? Like you spent about 10 minutes thinking about this problem. This founder spent like thousands of hours thinking about it.
Right.
Like listen, don't just give some rule of thumb. And I think the worst thing right now is there's a lot of venture capitalists, I think, that have only worked in venture and never really been in product or operational company in any shape and form in any way. And it's like, well, I read that TechCrunch article too.
Yeah, what's funny about this comment, which is it's sort of like it's if I tug the thread a little bit, it's a little bit of like, do VCs actually add value, right?
Yeah.
And how do they add value, right? And I've been thinking about this existentially too, right? I spent a couple decades doing a variety of things. I've done just about everything. And so I think I know enough to be dangerous and probably give bad advice, but I haven't been successful enough to give good advice, I think, right? So like I'm not an exited, Deca unicorn, founder, right? Decacorn founder. I've had some startups I failed. I've been a PM, I failed. I've, had some success in my career, had a small business, blah, blah, blah. I've had all these experiences, and I think what it makes me, and you have to know thyself, because every VC is different. But for me, it makes me a great investor. Like I could spot it. I can spot what's going to work. I can like kind of hone in on it. But I also know enough to know that I should not be giving advice. I could spot success and I know what's going to work, but I'd rather connect you with somebody that's way deeper in that particular vertical area, whether it's go to market or engineering or AI. Like I know enough to be dangerous and spot talent. Yeah. How do you think about that based on how you approach it, given you did all these cool things with Google, you spent a decade taking board seats, like now that you're in your, I guess third decade, we're in our third decades of our work lives, right? After college. Like how do you think about how you practice VC given all your experiences?
It's a great question. I think one of the key things is to be self-reflective and self-aware. And like what you said, I think one of the dangerous things I often see in VC is where it's like a super successful CEO then becomes a venture capitalist. And it's like, wait, but a CEO job is very different than venture capital. Like in venture, you're picking the team and the person that's going to be the
market, the timing,
all that,
the tech, product design, all the things, like the transformative nature, the moat of this thing. Yeah, like all the things. We have a framework, like it's ages long for every startup we evaluate. And we're kind of like, it is a beautiful snowflake. It's like beautiful mind with all the equations.
It is, yeah. And I think you have to really appreciate each of those elements,
Yeah.
And
it is completely different from operating.
Totally.
From running a large, like 1,000-person org.
Yeah.
Or a 10,000-person company. It's a completely different skill set.
Super different. I always tell the young people on my team, our young associates and principals, like I basically had to reshape my mind to be a venture capitalist because my gut instinct was to do products, right? To be operator, to solve the problem myself. And like when I first started in VC, I would give product feedback and write PRDs for people, and I'm like, whoa,
bad idea.
Very,
do not do that.
Amazing.
Because you're so deep on the design side because of your Stanford and experience and your Google product experience. Like you've been so deep in that.
Yeah.
And so you probably look at it and you can't help but give them like,
Totally.
what you're doing as an investor is you're looking for teams that don't need the feedback.
Yeah.
Right? You're kind of looking at like hundreds and hundreds of pitch decks and you're kind of looking at like, okay, well, And you can really make that decision in like a minute, right? Should I meet with this company or not? Like it's a 30-second decision by looking at the deck. Flip through it. Okay.
You can
And
tell.
then you get the pitch, you meet them, and now you're assessing like team and tech, right?
Yeah.
It's like team, tech, market timing, that kind of stuff. And as a Google PM, you're kind of looking at it and you're saying like is this at the level that I've seen in my career, right? At Stanford and Google and all these amazing companies that had these amazing exits over the last decade.
That's
So it's a lot of pattern. What people don't realize is how much pattern recognition it is.
It is so much pattern recognition, right? And pattern recognition is also realizing your biases, right? Because like my natural bias is, when I started my career was to gravitate towards product-oriented CEOs. But there are many different flavors of CEOs, right? Mark Benioff is an amazing CEO, but he's a sales guy, right? It's hard part, right? But he's an amazing CEO.
Right.
And so he's kind of realizing, wait, where are my biases as I think about this particular company? And as you said, Brian, every company is this like special, unique snowflake.
Yeah.
And understanding it. And then I think the thing I always tell my team as we look at companies, what are the one or two things this company has to really get right? Because they're going to get 1,000 things wrong. But like, if you have to pick one thing, if they get it right, does that mean that's going to be a big company?
Yeah, I think Sam Altman said this recently in like a Q&A. I think it might have been at Stanford, but it's not so much about what could go wrong because, I mean, it's a startup. Thousands of things can go wrong.
Yeah.
It's what can go right. And if it goes right, and like if you're looking at Uber and they're like, wow, if they get everybody to use this app and there's a bunch of people who want, $25, $35 an hour, like gig on demand work, how big could this be? Well, it could be huge, right? And so that's the thing that could go right. So many things could go wrong. The taxi, the regulation, blah, blah, blah.
Yeah.
And you can't even like really actually, even as an investor, you should know about the risks.
Yep.
But it's almost like you have to like go, yep, just ignore those. And if it goes right,
yes,
if this becomes a platform of record for this area,
absolutely,
or this becomes a runaway network effect in this area.
Yes.
You kind of look for, that's interesting.
Yeah. And I think it's one of those things where you have to assume things are going to go wrong in a startup, right? If things don't go wrong, it's like they probably aren't taking enough risks. They're not pushing the limits enough because it's so irrational to start a company. Like when to go leave
the worst idea.
Yeah. It's like, why would you leave your cushy job at Google or Facebook or
what have you? That's how I feel leaving Microsoft to start Team Ignite. I'm like, why did I do that? Like, I'm just like, grinding.
Yeah, well, hopefully you held some of that stock because that's it's amazing. I guess Microsoft's a $3 trillion company now.
Oh, is it now? Oh man, yeah. That's that's painful. No, I didn't hold on to all that stock, but whatever.
But I think that's the thing that it's as you look at companies, it is so easy to be dismissive. And I think the worst thing, I think the nature of our job is you get cynical so quickly, right? And I think that's what kills venture. It's like you got to be curious. It's about if it does work, what does the world look like? And like, do you think
you're much further along in your journey than I am? I mean, you're 14, 15 years into this. How do you stay positive? Because I can feel that creeping in now that I'm 6, 7 years in, and I've seen some failure, and I've seen the same idea fail over and over again, and like I'm getting cynical. Like I'm turning into that cantankerous venture bastard that I hate. Yeah. So how do I avoid that? Just asking for a friend.
Yeah. Right. I think it's like, in general, I think it's like living life. You and I, as you said, are in our third decade of our career, right? In general, a lot of people, I would say, like, as you get older, you get more cantankerous and more cynical, like stuff doesn't work.
Yeah.
Medicine, business, whatever, right? And I think it's about keeping that kind of curious mind, forcing it. It's a muscle. It's very much a muscle of like really believing in something, understanding why, suspending disbelief for that moment. And it does take a lot.
I think you're tugging on something here that I want to drill into, which I think makes a great investor. It's this curiosity, right? Is what you're saying. And it's the ability, and a lot of people I know, and I won't name names, but if you're listening, I'm sorry. You probably know who you are. They just don't like to try new things.
Yeah.
They're not curious people, you know? They're not big readers. They don't try new genres of movies or new genres of video games or whatever it is, like travel to new places. They'd rather just go back to the same place over and over again. Maybe what makes a great investor, and I love to, we'd have to pull the data out on this, is just being infinitely curious.
I think so. I think that's a huge part of it. I think infinitely curious and having good judgment, right? I think 99% of our job is judgment, because we're not really solving the problems. And if we are, the company's probably pretty broke,
Yeah. Yeah.
Like, it's really the management teams that are solving the problem.
It's a big red flag when a founder keeps reaching out to me with product questions or go to market questions.
Yeah.
And I'm like,
Yeah.
I know that stuff. I ran demand gen, I built product and stuff. But don't if you can't figure it out,
Oh,
don't-
yeah. I always tell my founders, if I know more than you about a market, something's wrong.
Yeah.
Like, it's kind of this idea
founders,
of
the best founders are teaching me to do stuff.
absolutely.
Yeah.
Absolutely. The best founders teach you. They also, I think, need the least help in the sense of the other thing I always talk to my team about is this a calculus problem or arithmetic problem, right? And I love talking calculus, like math geek or whatever. I love calculus. I don't like arithmetic, right? Is it helping somebody do some of the basic stuff is that's fine, but maybe you haven't fired somebody before or whatever, right? That's all fine. But really, what really matters is strategy. Let's talk about that, right? And the best founders also, I think, have really good discussions and know how to utilize boards to talk about strategy in deep, deep ways, right? Opposed to just let me present my 10 slides in a very kind of rote fashion, right? And regurgitate ideas and that sort of thing. Because sometimes it's unclear what you should be doing. I think that's one of the things I really learned in venture, which you've asked me, 14 years ago. I don't know is a good answer. When someone's like, well, what should we do about this? I don't know, but I know I can work the problem with you together and we'll get to a good place on it, right?
Yeah.
But to be able, opposed to being like, oh yeah, this is what you should do. I saw this in 1985. This is how that works. I'm like, no, that's never the right answer. It sounds smart in the room though. It makes you sound really smart.
Yeah.
But it's not the right answer. Yeah.
This is why I don't ever want to take board seats. I actually don't want to sit there in the boardroom with a founder. I just don't aspire to do that. I'd much rather meet a new founder.
Yeah.
I'd much rather spend my time meeting new founders and then help them, put them on the podcast, connect them to Team Ignite, all that stuff. But I just don't aspire to sit there and do the governance part. So thankfully we have people like you and others that will do that, right? Because it frankly saves our necks as early stage, seed investors that are writing, investments on safes and stuff like that. We got to have the adult supervision.
You need both.
Yeah, you need both. Yeah. Yeah, you need we're the farm, right? The seed investor, kind of the farm. So tell us about your latest firm and how you made that transition. You're at this Highland Capital, you said, for a decade, and how did that transition go to your new thing?
Yeah. I mean, I loved venture. There are things I wanted to kind of leave behind and some things I wanted to take with me, so to speak, right? And at Nava, our approach, we're not reinventing venture capital. We are a Series A firm. We make fairly concentrated bets. We manage just under 200 million. We're only going to do 15, 16 deals out of our portfolio. So very concentrated. Which
is a different strategy from my pre-seed seed strategy, which is very much hey, let's go do 100. Versus hey, I'm going to write a huge check in A and I'm going to take a board seat and I'm going to make sure this founder's as successful as I could possibly make them. It's a different strategy. There's no wrong way to do venture. There's plenty of right ways, right?
Exactly. I think there are many different ways to success. And I think for our team here, what we wanted to do is that high conviction bet. What we saw was one, historically I'd spent a lot of time doing Series A's, but also this gap in the market where a lot of these big platform funds have gotten sort of mega big, huge, right?
Oh, yeah, billions of dollar fund. Yeah.
And if you think about, some of these giant funds, what moves the needle is the $250 million kind of growth check, right? If you write a $10 to $15 million check, it's not that big of a deal, right?
Yeah.
And we saw, okay, there's an opportunity there.
Yeah, it goes 1,000x. So let's just do the math here. You have $1 billion fund, you write a $10 million check, it goes 100x, it returns the fund, right? But the chances of a Series A check on 100x is pretty low.
Very slim, right?
And so your fund size is your strategy, right? If you have $1 billion fund, you have to write 100 million, $250 million checks to just get that deployed. If you have billions of dollars to deploy.
You do. Yeah. And then you're the incentives are a little different, for us, everybody in our firm works for the carrot, right? That's what we talk about all the time. Even our admin team, everybody gets carried, right? And that's really important to us because that's creates a good incentive alignment. I'm a fan of Charlie Munger and, the idea that show me an incentive, I show you an outcome, right? Our founders are working for equity and so are we. I think it's really dangerous when VCs get into the AUM game And it's just like, well, you're getting paid millions and millions of dollars, regardless of which way what happens to this company,
Uh,
That's not
and I've seen
always
some other VCs go the other way, right? They'll do, okay, great, we'll do 1.5% a year instead of 2, and then give us 25% on the carry because they
Totally.
just feel comfortable that they can pick them,
Yeah, and I think all these different models work. Again, as you said, fund size dictates strategy more than anything else.
Yeah.
And so for us, we wanted to have focused funds that really made it you like on, the night before investment committee sweat bullets. Like, okay, because it's not just about the money. It's like, okay, do I want to work with this person for the next 10, 15 years?
Yeah.
Right? Maybe I'm a Series A. I want to be
Well,
on
if you're only making 16, 20 bets per fund, I mean, these are with 200 million under management. I mean, these are big swings.
Absolutely.
$10, $15 million swings. And so you got to be highly convicted that this is going to work.
Yeah. And I think that is good. It creates a good forcing function, right? And for Nava, I would say kind of back to basics from venture, but also being able to kind of work with entrepreneurs in a way which is that really high touch, Like our firm doesn't have like a giant marketing team or recruiting team and all these ancillary services. Like, some firms, Andreessen kind of famously has built out this giant operating team.
How do they fund that? Is it just with the 2%? I haven't looked at their books, but do they charge more? Yeah.
I don't know, but I suspect a lot of it is they manage billions and billions of dollars, so there's a lot of
just a lot of cash
to go around, right? And it's a model, right? I'm not saying it's the wrong way to do it, but it's not something that I and my partner were excited about building a firm to do that.
Yeah.
So it's a little bit purist in that way in how we operate. It also allows us to have really high fidelity conversations with our founders at this kind of formative inflection point for a company, right? Like every stage of company life, there's like inflecting hopefully, and at the Series A, I think it's one of the most sensitive moments in a company's life.
It is, yeah.
Like you're building
the transition between being a child and being an adult. It's kind of the Series A is like the teenage years for a startup. It's very sensitive. You're just kind of walking around grunting and
right. You're a little awkward, like
kind of awkward. Voices cracking.
It's like that, yeah.
Starting to have feelings.
Yeah, but and it's like you can see people probably, like, not to butcher this analogy, but it's like you probably had a really tough puberty because you're an angry adult. Like, what happened to you?
Yeah,
you've gotten some more hugs. You'd probably be a happier person. But I think with companies, it's the same. Where in the Series A, it's less about, okay, are you gonna kind of go to like 1 million to 10 million ARR or something like that. I mean, we certainly have met founders that can just grit their way to that, even if the product isn't there.
I had another VC tell me, Cam Duty from Brickyard. I don't know if you talked to that accelerator. Love Cam. He's been on the podcast. He goes, it's absolutely, to get to an A, it's absolutely just grit.
Yeah. But I think the ticket to a B is not grit.
No, that's different.
That's different, right? And so
you should be able to grit your way to an A is what he said.
Yeah, and I think that's true. And I think the thing that's interesting, though, from the A and beyond that we look for is, like, can you build the foundation that you're really going to scale the company on top of, right? So it's less about 1 to 10 million ARR, some arbitrary revenue metric. It's like, do you have a foundation that's really going to create a flywheel effect in your company? And that's that moment where it's like, I don't know. I
kind of unlock that for the audience just for context. When we're investing in the pre-seed, we're looking for hundreds of thousands of revenue. Seed, you might be 500 million. A, you're anywhere from 1 million to 3, even 5 now, it seems like, of ARR. And then, from A to B, you're kind of looking at that like 5 to 10x, going from 1 to 2 to 10 to 20, somewhere in there.
Absolutely. I think those are the metrics people talk about in the market. Our point of view, though, is we don't look at those. We think that it's a part of the equation, but it's not the defining part of the equation. There's so many companies I've passed on in the last year that were Gen AI that grew from 1 to 8 million or 1 to 10 million in 12 months, bootstrap or friends and family to that.
Wow.
But for me, it was much more like, is there a foundation here? Like, if I would have this conversation with this founder in 3 years, what have they built? All revenue is not equal, particularly at the Series A. It's not a financial lens purely, because if it was a financial lens purely, anybody could do the job, right? This goes back to that pattern matching that we were talking about earlier of, like, what are you really building? What is the moat? What's the real deep insight here? That's that foundation that's going to let you build something of scale and consequence.
I love this. And this is so insightful for me as a seed investor, is you're kind of looking for a company builder, right? A culture builder, right? It's not just like, hey, I got lucky and I rode the wave of this Gen AI thing and I just 10x my revenue and I bootstrapped most of it. Like, great. Have you actually built the foundation to take this thing to the next level? Because now
Absolutely.
we're starting to get into big culture company mode, right? Hyper scaling, blitz scaling, whatever you want to call it. And
Mhm.
then, if you have a rocky foundation, if it's sitting on a bunch of pylons in the ocean and they're all crumbling, maybe you'll get washed out to sea, right?
Yeah, yeah. No, I like that analogy. And I think the thing that's different now than maybe 25 years ago is because the seed market is so rich and the ecosystem is so thick, it's relatively easy to access seed capital, which was not the case 30 years ago.
Yeah.
Right? Even for Series A. So I see so many companies that, hey, that's a great idea, but I don't think you should have ever taken venture capital.
Mm,
You're solving a real problem. I can see where this business would be a $20-30 million a year business, but I don't see the story to public company,
mm.
and I think one of the things I often worry about with companies when they pitch me at the A is like good growth, etc. And I'm like, is this the same product that's going to scale throughout? And
Yeah.
so, or are you like, oh, well, you have to build this giant product suite, we're going to build 100 other products on top of this. So we have all these SKUs now we're going to try to sell, and that's how we're going to become a big
The
company.
complexity is so great. I mean, what you're
Oh, yeah.
tugging on there, and just to clarify for the audience is, as you scale, going from 0 to 1 is a huge undertaking. Going from 0 revenue to $1 million, that's incredible. But when you go from 1 to 10 or 10 to 100 of ARR, the complexity of the organization and the segmentation of your customers and the go-to-market plans and building that organization around, it's a whole different animal and a different beast.
The thing I would love is like, the same way people publish all these kind of SaaS metrics and that kind of thing, if there was actually a little bit more color on exactly what you just said. It's like, the SaaS metrics is a shorthand that I think does a disservice. I think it's much more about some of the underlying organizational complexity. What are you building? How hard is that? That should be part of those discussions, because these aren't public company analyses, and I think it's dangerous when people start just using those kind of lenses on these like very early stage companies.
What are some key things that are must-have for you to entertain a Series A investment, and what are some kind of red flags where it's like pretty much an automatic no?
Yeah, absolutely. A few things. One, I love founders should tell me a secret. Tell me the unknown about a market. You think about this thing for 1,000 hours. I thought about it for a little while. Tell me the thing that you see that nobody else in the world sees. That's really critical. We love founder market fit. A lot of seed funds look for founder market fit, of course.
Yep.
But I think at the A, that's important. Usually you don't have product market fit, but really that kind of, and on the market side, we spend a lot of time thinking about market dynamics at the A for my firm. We think a lot about, if this market in 10 years it grows, could it be could it create hundreds of billions of dollars in value? So in 10 years, can a market grow to that scale and size? Could be a small market today, could be a big market today. But I think the best tech companies actually go from market taking to market making. They reinvent the market, right? Uber taking taxi cab market share to creating a whole new market, right? Et cetera. There's
That's why a lot of people pass on Uber too. A lot of investors are like, oh, how big's the taxi market? Oh, not that big, like whatever.
Totally. And I think that's the wrong analysis, right? That's like, second year banking analysis. Market analysis is actually a lot of art to it, of thinking like, how can a market evolve? What are the fundamentals of a particular market? What's important? How can it work? So we love thinking about market size, but not in such a draconian way as like, well, taxi cab market is this because...
More in like, how does the market dynamic put wind in the sails of the startup? Is it going to be a tailwind or a headwind, basically?
Got to be a tailwind. Yeah. All right. Always has to be a tailwind, right? And I argue, like if you're not riding that, I think you end up in a suboptimal place because your product is probably B+, as we were talking about before, but it's really got to be pulled in that market and then reshaping that market. Like, I always, even in the enterprise, I spent a lot of time in enterprise. I've also done a lot of consumer deals. I really look for companies that build new habits, enterprise companies, just like consumer companies. How do they take up the time of the end user? One of the things that I love to do when I look at enterprise-oriented or dev tooling-oriented companies is like, if someone uses this product, are they going to get promoted? Do they look like a superstar within the organization, right? Because that's what matters. You can talk about all the fancy math and all the fancy scalability and all this stuff.
I love that analogy because back when I remember thinking back to my MarTech days, I was a Marketo certified expert, one of the first. And really just a master of Marketo. I knew that system in and out, and I got promoted and lots of headcount thrown at me because I just knew that system so well. And it was a really good product, a $1 billion outcome, sold to a private equity firm. My wife ended up working there at some point. And I just knew, I was like, yeah, you should go work there. It's a great product.
And that's
so
what
I love
great
that. Yeah.
It like got you promoted, got you more money, got you more sort of attention within the organization you're at. That's what great products do. They give sort of the lowly employee superpowers, and it makes them feel cool among their coworkers.
Google Analytics in the early days. I can use Google Analytics, Like, cool.
I mean, tell me the traffic and all this stuff, and it's incredible.
Yeah.
So I love to look at that as I talk to companies at the Series A. It's like, okay, does this widget, whatever you're building, give me superpowers, right? Is it making me look like a superhero in some shape and form, right? Yeah. The other thing that I think is really important that I certainly did not look at early in my career, but now I care a lot about is capital efficiency. Is this, especially
what does capital efficiency look like in the A? So like they've probably raised 2 or 3 million at this point.
Yes.
Coming into the A round, and how much ARR is it? 1-to-1 basically? Like you're kind of looking for a 1-to-1, or?
Well, it doesn't have to be such a ratio, like a burn ratio or something like that. I think about it more in the sense of like, if I believe in this company, they have to raise billions of dollars to get there, or it's like, and I think that's one of the things that actually I worry a lot about with some of the hardware companies that are getting invested right now on the AI side. It's like, wow, the burn is so high. And you're competing with just such giants.
Got to be careful with the low margin stuff.
Exactly.
I've been burned a couple times. I have almost 140 companies now in the portfolio over 6-7 years, and it's that low margin consumer hardware stuff.
It's hard.
It just burns you.
We have this great saying within our firm, which is that gross margin is for intellect, revenue is for ego.
Yeah. If it's venture scalable, it should be like basically 90%, 80% on the margin. It should be infinitely scalable. It should be build once and distribute to 1 billion people, pretty much.
Absolutely. And if you don't have a big gross margin, you have to execute flawlessly. You have to be so good because gross margin.
You got to be like Elon Musk level operations, like on the line, 120 hours a week, just building a makeshift factory in the parking lot, like just on the ground, boots on the ground. Yeah.
And that's not a bet I would take. There's like maybe a few people in the world.
Yeah, Elon comes, and says, hey, I want to do a new blah hardware thing. It's like, okay, you've done that before.
A few people in the world that can do it, right? And by the way, Elon has infinite access to capital, right? He's not a regular founder. He's got his own capital, and many banks and other people will help hopefully fund his next.
Yeah. Well, I could talk to you for an hour, but let's do a rapid fire just to kind of wrap up for folks. What was the most transformative product you worked on at Google?
I would say Google Maps. So I built out the aerial imaging group there, and I love Maps, so Google Maps.
What's one piece of advice you give to all startups you mentor?
Do less.
I love that.
So I think that, do the one thing that really matters, 1 or 2 things. Usually startup founders are pretty smart and they multitask and they're doing like 8 to 10 things. Doesn't matter.
Yeah.
Do every day.
When they see a roadmap and it just has so many bullets on it, it's like, oh my gosh.
Too much. Too much. Like, yeah.
What's your favorite book on design or design thinking?
Oh yeah, it's a children's book. It's called Press Here.
I haven't heard of that one. I'll have to check that out.
Yeah.
What's your biggest lesson learned as a?
It's okay to say I don't know.
Yeah, and VCs often don't.
No. That is
Founders
true.
are educating us.
Yeah.
What's your vision for Nava over the next 10 years?
My hope is that we build a generational firm. There's been so many great firms in the Valley, and we've been fortunate to be mentored and associated with a number of them. And I really do hope I can build a generational firm that does venture a little bit differently. And that, I hope that the next generation of my team, like, basically becomes my boss.
Yeah, that's great. Well, how can folks get in touch with Nava and you?
Yeah, so our website is www.nava.vc, and I'm always happy to chat over email or in person. My email is Manish, Manish, @nava.
Thank you so much for coming on the program. Really enjoyed it.
Thanks, Brian. This has been great. Have a great afternoon.